Thank you, Marlon, and Heidi ho, everyone. Welcome aboard. It is Thursday already. Where does the week go? Goodness gracious. Can somebody please answer that for me? I've got no idea. It just flies by. And here we are. It's another Trading Buddies. Thank you for joining us and being our Trading Buddies. We are very, very pleased to have you here. My name's Jeff. Those of you who are here for the first time, welcome. We hope you get a little something out of the show, but it is in fact your show. So please feel free at any stage, jump in, whether that be by chat or if you want to come on screen, by all means, only too welcome so to do, and share your thoughts or ask for ours, whatever, and ask for the trading buddies in the room. It's all good. And that's why we have the show, so we can help each other out and hopefully get some money in the bank. I'm having a bit of a tough time of that this week so far. But let's see if we can improve that. And I'll start with, as always, the pound versus the US dollar and see if we can find a way to make some money on this one today. All right, what have we got? We've got a range that has a high at 1.1241, so 1.1241. We have a low at 1.1191. Those of you here for the first time, what I'm seeking to do here, pardon me, is trade the breakout of Asia session. Asia session begins here. Tokyo open at 0200 on this platform. And the current bar, of course, is included in that range. So we're just isolating the high and low of that range and seeking to enter at the midpoint, looking for a breakout in either direction. Now, we only trade in one direction, and it's determined by where we sit at the time London opens. So at the moment, we're above the midpoint, and if we're far enough above the midpoint, we'll look to short the market. If, however, we close down here below the midpoint of the range, which is here, we will choose to trade long. Now, if we're anywhere near the midpoint, now that's a relative thing, I know, and I can't put it in an amount of pips, I'm afraid, because that depends on the range, really. It's pretty much a visual thing at this point. I haven't proved as yet which is the right formula for this. And of course, this is very much still in test mode. So if you are thinking of following this or trading this, please do not trade this with any meaningful amount of money. All right, at the moment, with not long to go, we were looking to trade this short, and I'll set up for that. The entry, of course, will be at the midpoint, 1.1216, and the risk will be absolute minimal. Not break of bar, but 1.1216. Okay, at this point, we're high enough above the midpoint, and I'm happy to take that position. The stop loss will be at 1.1241. And we won't be taking profit at 20 pips. I'll fix that up in a minute. But we'll just make sure that we are ready to go when this candle closes. TP1, we know what that is. Okay, that is 1.119, sorry, 1.1191, yes. 1.1191. And we will remove nothing, but we'll put our stops to entry at that point. TP2 will disable, and it is a sell. Okay, so order is selling here, stop loss here, TP1 here, TP1 meaning stops to entry, and take nothing off the table. The target on this one will be 2.5 times the risk, and the risk is 25 pips, so it'll be 2.5 times 25, which is 62.5 in my book. So let's make the target 111.53, 1.1153. that will be the target. So we can put that in TP2 if you like. TP2 1.1153. I think that's what I said. And we will close the whole position. There. Okay. TP263, close 100%, TP125, move stops to entry. Righto, we got it. If you, as I say, are following that, then please do so at very, 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 very small risk, because it is an unproven system. I'm actually quite liking what I'm seeing with it at the moment. Really, by trading this way, if we get one winner in 3, then we're going okay. G'day, Lewis. How you doing? Happy Thursday to you, Paul P. So we need one winner out of 3 to be profitable. I like those odds. They're good. 33 and 1/3% win-loss ratio, and you're still winning. So we may be keeping this, maybe just adjusting it a few times to see exactly how we can trim it or get it better. But at this point, I'm happy with the results so far. All right. That is pretty much it for the pound at the moment. We'll come back to that and have a look, of course. If good week so far for Lewis. Excellent. I'm having a SH1T week so far, Lewis. Well, it's not disastrous, but it's not going that great. I'll update you on exactly how that is going. I think the first trade I took was Aussie 200 long. I did reduce my risk on this. I took a little bit of profit off the table and reduced my risk just before this candle reversed. So the risk is reasonably small on this Aussie 200. Hoping for a bounce off there. Counter trend and just looking for a retracement really back to this trade line. That was the plan anyway. Thus far, not so good. But there is an offset here as well, an offset head and shoulders. You probably can't see that because you have to be kind of standing on your head, but sometimes I do stand on my head and see things like this: left shoulder, head, right shoulder. It is offset, as I said. If that's the case, that's the weird neckline, which has been broken, and we're now going through a retest period. If price gets back below here, of course, we're in deep SH1T, but if we get a bounce here, as I said, I think we can go up to this trade line, maybe even a little bit beyond to this level here. We shall see. And if this were to reverse, then we might see something like that. That's why I've taken the trade. I think the reward, or the potential reward to risk, is fairly substantial. Lewis is short gold. Awesome, buddy. Awesome. You know my thoughts on that. Pound $1 short. Pound dollar daily short on Tuesday. We'll have a look at that in a sec too. Why can't I get rid of this? There we go. All right, so that's the Aussie 200. As I say, massively counter trend, and still I'll be looking for shorts in this area. I'll be looking for a false break of that trade line at some stage, but I think it can get there. Today may well tell the story on that, or overnight with the S&P 500. This will follow that, of course. Oil also took oil short here, and this was the obvious profit level. The monthly pivot, it hit that nicely, stops to entry, so it banked a little bit, and the change of fortunes there on yesterday, late yesterday, saw oil out for a small winner. We've got some problems with EuroCAD. EuroCAD I was playing on the weekly chart, and it's not out by any stretch of the imagination. I was trading the break and retest of there 2 weeks ago, which didn't trigger. Saw no reason to change that, so placed the order again on Monday, and that has been triggered. And of course, as it hit that resistance level, come straight back off it. Got the pivots here protecting me at the moment. Wouldn't like to see it get below the weekly pivot, and we've still got the monthly pivot protecting as well, but wouldn't like to see that go south from here. I'd like to see a bounce and get back into the profit area. I also reduced my risk on this same scenario, took a little bit of profit above the entry, which wasn't much, I must say. So just reducing the risk really. It's a defensive play more than anything. What else have I done this week? Pound Kiwi, do I mention Pound Kiwi? Probably not. So Pound Kiwi, 3 false breaks really of this range and double top, lower high. That's what I'm playing here off the pivots. Have been entered, nothing really happening, to be fair. I thought we might get a nice little rally or run, sorry, down to this level, but that hasn't happened. We've now come back and tested that area. Today probably will tell the story on that one. That's a 4-hour trade. As I said, I think on Tuesday to my group. Couldn't really find anything on the dailies that suited me, but the 4 hours were shaping up okay. This was one of them. Euro something else was another, which I didn't take on here, and it didn't work. So 4 hours not doing so great. We'll see how that pans out, but at the moment that's also in drawdown. So yeah, not having the finest time at all at the moment, but hopefully today can swing those around. I've banked 3 times, would you believe, and still negative. Sometimes that's the way it goes. Righto, as far as what's on my watch list today is concerned, CAD Swissy was actually the first of them. And CAD Swissy was a dominator. But it was kind of out of context in many respects. When I trade a dominant break of a trade line, it's generally with trend and with momentum. There was none here. This is just simply a breakout of a range at the end of the day, but there is a double bottom. There is a higher low, but there were no higher highs. Maybe this produces the higher high. So that's why I didn't take that. A pullback here would change my mind, but a re-entry below that would indeed make me bearish. So at the risk of missing the entry, which seems to be the case, I've let that one go. CAD Swissy, wasn't prepared to trade it. Euro dollar, interestingly, is on my watch list today. And that's because, very similar, but far clearer, in my humble opinion, to that one we just looked at, CAD Swissy, because we do have a turnaround point there. I don't even know what you call that, Morning Star, I think, or something like that. Then you've got not yet a higher high, which is a little bit of a concern if you want to trade it long, but then you've got the higher low. And on the back of that, you've got a nice little slingshot pattern as well. And there's been some shots over the bow. That particular 3-candle pattern there, followed by this particular potential 3-candle pattern here. It was actually a 2-candle pattern, suggesting that if price goes back to this level, it'll go to that level and possibly to that level. So that one's actually still in play on the day. I don't know why I didn't place that. There would be, oh yes, there is a reason. I can see it now. The reason I didn't place that order is because of this level in here, this support level. And trading straight into it doesn't really excite me. I'd much prefer to see something like, if I am to trade this long, I'd much prefer to see this level break, price down to here, consolidate back above it, retest it, then I can get in here, get some profit in the bank before I hit that former support level, which should offer resistance and then be safe in the trade if it does reverse. So I think there's a few that potentially could reverse. Not sure that it's a long-term play on euro dollar at this point. There will come a time when I think that's the case, but I don't know that this one is it. But I'm willing to try if I do get a good setup, because I am getting warning signals. This is warning 1. This is warning 2. The higher low is interesting. That's euro dollar. I've also got on my watch list pound CAD, but not for today. This will be a trade tomorrow, and I'm pretty keen on it if it does set up. What on earth is that red line? Sofran Sahakatesh. That's what it is. I was pointing something out to someone. That's right. Let's get rid of it. There we go. So this now looks a whole lot better. What I'm looking for here is a short, and it will come as a false break of that trade line. All I need, I would have much preferred price to come down and put a low below the weekly pivot, but all I need to see is today's candle be bullish. If it retested the trade line, that would be great. If it retested that level, that would be greater. But either way, I'm more than happy to trade that short if we do get a bull bar today. It has to be a bull bar today, and I'd really like it to test something, daily pivot, trade line, or that level there, which is probably around about the DR1 mark. Lewis, bounce the bottom trend line and up it goes. Euro dollar. Yeah, mate. Look, I'm kind of ready for it, but not ready enough to trade it just yet. That is pound CAD. There's one more on my watch list today, and it is Kiwi CAD. Now, the Kiwis had an interesting week thus far. This is exactly the same as euro dollar in terms of the setup, right? I'm getting warning signals. There's one there, there's one here, and there's one here. I nearly traded this morning, very nearly traded this morning, but I'm exposed to the euro CAD long, so that would have been putting me in a perilous situation in terms of my risk. So decided not to. If I can find a way to reduce that risk exposure to, well, essentially the CAD short, I suppose. If I can find a way to reduce my exposure to that, then I would place that trade, because I think it's a good one. This one here. It's Kiwi CAD long above the doji. And I think that's probably around about the extent of my watch list at the moment. There are a couple of other things that I looked at early in the week that we can probably go through a little bit later, but for now, it's time to say goodbye. Make that g'day. Ash, how you doing, bud?
Yeah, very good, mate. Very good. Interesting, I think, today with quite a few things going on overnight. I don't know whether you were sort of seeing the
I wasn't. The news. Whatever it was, I wasn't. No. What happened?
Well, some of the headlines are quite interesting, mate. I mean, we've had some inflation numbers out overnight and today as well. So let's catch up on some stuff and see what could be driving the market, because there's a few kind of there's some counter arguments in some respects kind of going on now, which is the first time in a while, and I wonder whether we might actually see some upside in this market, which is what I'm looking for. I will bring in my charts here and we'll have a look at
pound is triggered, by the way.
The pound's triggered short.
Yeah, not very good price action, but we are in the market. Yes,
that's good, man. Okay, so let's have a look. Let's have a look at what we got here. So we'll start with what's kind of moving the market and really some of the challenges that investors have at this particular stage. And I wonder whether we might get a little bit more bullish on the market over the course of the next week or so, maybe. We'll see sort of how other things pan out. But yesterday we had CPI data year on year from the United Kingdom coming in at 10%, so incredibly hot. And with the Bank of England behind the curve, it could suggest that that we see a 100 basis points rise from the Bank of England. That's a possibility.
Cool.
And morning, Lewis. If they are going to stay in lockstep with some of the other central banks, they're going to have to go. You know, that they've been really cautious to this point. Everybody's trying to avoid the heavy recession. I think everybody accepts that there's going to be a recession, but everybody's trying to avoid the challenges of a real deep recession. I think it's probably a losing battle. I mean, it doesn't mean they shouldn't try, but it's probably a losing battle. And the reason I think it's probably a losing battle is I think that they were just too late to come to the party. So I think that there probably will be a recession, and speculators obviously sort of are quite concerned about that as well. And when you see 10% in CPI, then it does suggest that there will be a push in the bank's rate. Now, whether the United Kingdom do that or not is still a huge question, because they have been quite dovish really to this point in comparison to everybody else. PPIs as well. So nothing really came out to kind of cheer the market up. The housing price index was the one area that did dip down a little bit. So that could be quite an interesting development. What happens with the housing price index? CPIs from Europe as well, near 10%. So that doesn't seem to be going anywhere, and it does suggest that the EU are going to have to do a lot more. So you've got the Bank of England having to do more. You've got the EU having to do more. Then you've got the numbers coming out of Canada, not as bad, but they are still, common CPI year on year at 6%. So that's remaining quite sticky in Canada. But where things get interesting are things like this, like building permits at 1.56 million. So that's a build from last time out in the United States, suggesting the economic situation is not really being too hampered by the higher inflation and the higher interest rates, which is quite incredible. On top of that, we've started earnings season. IBM posted, well, in fact, we start with Netflix. Netflix beat a couple of days ago, substantially adding to their subscriber numbers.
So their change of tactics must have worked. Eh? Interesting.
Yeah, I'm not entirely sure whether the change in taxes have even actually been implemented as yet. But I think what it does suggest, because the change of tactics I'm guessing you're referring to is the advertising revenue. But what it does suggest is that the advertisers will be a lot more interested. I mean, if you're a company and you're going to pitch, what you want to go in is you want to go into your pitch with some decent, solid numbers. And it does suggest that those numbers are probably solid enough to give Netflix some leeway and some headroom for negotiations. So as I say, we're not there yet. So potentially Netflix has got another leg to go if the subscriber numbers, at least stay where they are. I mean, it was a decent build. But no bellwether for the economy. But I think, as the kind of first of the tech names to start posting, it was a significant number. But then off the back of that, you get IBM. Now, IBM increased on the top line and the bottom line. So again, not really showing too many concerns, or not really showing anything too negative from the higher interest rate and higher inflation numbers. They are saying that the higher dollar is putting pressure, as Netflix did. They're saying that subscriber numbers globally are going to be, Lewis, they're up 13%. I mean, it's crazy. The jump in Netflix is amazing, but it should still go. That I think Netflix is still a valid stock to own, particularly if you like the lows and the Nasdaq, and we'll have a look at that now. But in a moment.
But what of the competition, Ash? There's so many streaming services. Why Netflix?
Well, this will be the interesting thing. Do Disney equal Netflix numbers? And I don't know if you've got subscriptions, but I think many people, if you've got a subscription,
way too many.
You got exactly. Well, this is the point. You don't buy one. It's not like kind of going into the store and buying potatoes where you're only going to buy one brand, or baked beans where you can buy one brand, or pasta. You can buy a few of these brands. I've got Disney Plus, I've got Netflix, I've got Amazon Prime. So and there's Now TV as well, which is a Sky subsidiary. So that there are a lot out there. but it would suggest that the bigger players are probably going to be doing okay here. You know, we need to see what the Disney numbers are. Yeah, you might be right, Lewis. They might have an edge. But now TV have got Game of Thrones. Amazon Prime have got Lord of the Rings. Netflix have they had Squid Games as the big thing. You know, they sort of like released the whole season. That was their strategy. Release the whole season, and it made Netflix. It made Squid Games a phenomenon. It was an unusual play. Yeah, it was an unusual play to do that, but it's really worked out for them. So people would binge watch it and stick with it, but it does put pressure on them to continue adding content, but they seem to be keeping pace with that. So Netflix doing well. We'll see what happens with Disney. We'll see what happens with Amazon Prime aspect. But IBM came out, as I say, that they also reported decent earnings. Tesla's got problems. You know, there were some issues with Tesla, but they still provided some decent numbers as well. So far, we haven't had any companies that are suggesting that the squeeze is really taking the effect that I think many people feared. Now that's, you know, we're only in quarter three earnings really of the start of the hiking cycle, and if it goes too much further, maybe next year we do start to see the squeeze a little bit more. We'll see what the numbers are like in January. But if
just between you, me, and the gatepost, there's a beautiful reversal bar on Tesla at the moment on the daily.
Oh, chart. There you go, mate. There you go. Well, let's have a look at what that suggests for the market, and you know, because as I say, I'm relatively bullish on this market, and you know, this is the main reason is because I think even though we have these higher inflation numbers, people are getting kind of used to it in a way, but they are getting concerned with the central banks. You know, we see Lewis made the point with gold. The suggestion is that the central banks keep going, that the treasury gilts and everything, and the bunds and everything else go higher in value. They go higher on the yields. That pushes things like gold down. Eventually, it's going to affect stocks. But we are in a particularly bullish season for stocks. And if we look at the numbers here, let's just bring this in. Get that in a second. We'll bring in the charts. Then let's talk about the Nasdaq to start with, because you know, obviously we are talking about the Nasdaq when it comes down to Netflix and the like. Then look at the dailies here. The daily chart is potentially forming this inverted head and shoulders, and you know, we are down near lows now. It's possible we're going to have to analyze this chart with some subjectivity here, because this is what we've potentially got forming here, an inverted head and shoulders. That would suggest that we go back to at least this point here, and there's a possibility that we could actually see maybe that hit. I mean, there's a trend line coming down here as well. That would sort of suggest that would coincide with those numbers there, and it would probably run quite nicely along here as well. So that would be a potential target. Now that puts that puts the Nasdaq up around about 9%, you know, from its current lows. So there's a chance that we do get a 9% pop going into the end of the year. Now, if things don't go up and down in a straight line, as we've seen, so, you know, on the charts, we can see it here. But is this a place that that this could push to the high side? I think it could. I think there's a decent chance that the Nasdaq rallies from here, and I'd be much more interested in the Nasdaq than anything else. But obviously, we want to make sure that the rest of the market is looking like it's following. So that's on a daily. Now we probably want to see a daily reversal bar to give us that confidence that we are going higher. But it's looking okay. Looking at the 4 hour, we've got this little downward sort of draft going on. So looks like it needs to clear that daily pivot to kind of get us involved in some upside. If there's a 9% run here, yes, you're going to miss out on around about 2% of that. But you know, there's still the another, well, to the that's probably about a 5% sort of gain there to that point. So you might end up with around about a 5% run because you've really got to kind of like make sure there's a bit of safety. Now, if you're going to go in a bit more aggressive, then it's got to clear this level here, and further company earnings coming out at decent numbers will help that out. But we're looking at the hourly chart here. There's a possibility that we're getting an inverted head and shoulders on this as well, forming. Let's wait for the top of the hour and see what that suggests. But there's a possibility that could be going on. This is problematic, and this is what we've got going on, mate. We've got fundamental data which is really not really not able to agree. That's what's happening. It doesn't really know. We got earnings coming out well. We got inflation data continuing to push. Doesn't suggest central banks are going to be reversing. That will reverse the market if the central banks decide to pivot. But there might still be some upside before we come down again. Is my point here. So potential of a bottoming out of this particular area. And if we want to know why the area would bottom out, drawing a straight line along that and bringing in a longer term time frame, you can see that there's a level here. And if you consider this bar here, all we've come to do is really retrace against this bar. And coming back to the 4 hour, this is a break of this particular whole point here. But if you look at what's really going on, this is a higher high and a higher low. A higher high. Is this a higher low? Well, it could be, mate. It could be. So I think the technicals suggest that we could actually be pushing a little bit higher. I think that there's a case to be made to suggest that we could be getting a technical reason to go and buy this. I think that there is a case to be made to suggest that there could be a bit of buying coming in because of the decent earnings. We saw Netflix push 13%, as Lewis said. It was up 13% yesterday. So people are buying. There is some interest in this market.
Well, you're now looking at bottom feeders coming into the market, right?
You're absolutely right. You're absolutely right. But if we consider this on a monthly, where we are really is this on this support level. We're right on top of this support level. And I think there's a decent chance that this month does actually hold at this particular point. Do I think it's going down here eventually? Yes, I do. But I wonder whether we might just get a little bit of a relief rally here. If we can find the correct level here. Looks like it's there. So that would suggest that we come down into around about the 9,000 level again. And we're currently at 11,000. So it does look like another 10, 15, 20% drop in the NASDAQ is due. But would I want to take a short here? No. Would I want to take a long? Yeah, I would, because I think that we're in a buy zone. I just need a reason. And I guess the point I'm making is that reason may just be starting to appear.
With the earnings coming out. Yeah. Okay.
Yeah, exactly. Further earnings that are pushing things to the upside. Netflix came out with decent earnings, and there's a 13% rise in a day or so. So there's a lot of knee-jerk reaction going on here, because what people realize is if this is the bottom, then it doesn't matter if it hops up 13%, because it's come down so far that the rest of the move, that there's the potential upside is way beyond the multiple of a 30% rise in price. So indeed, there's a ways to go here. I think Tesla's interesting, as you said. That I haven't looked at the reversal bar, but I think Tesla's interesting. I think Tesla's got around about the 170 level. Looks really cool on Tesla. And I know we're about 220 right now, so we're a little way off from that. But there could be some rallies going on, and people want to own good companies. They know that they've come down from their highs at least 25 and in some cases 50%. And they won't be too bothered if there's another dip down in value. If they got them at got some Tesla at 220, Lewis has got it in. I think that's great, mate. I think that's really personally. I think that's really good. I think that there's a decent chance that Tesla do rally. And Lewis is saying about WTI, interesting again. Oil yesterday, Joe Biden came out and said that they will be buying oil at $70 a barrel. So oil producers in the United States have got confidence that if they do provide the market with supply, it will be swallowed up with demand because the US government.
Joe trading futures, is he?
Yeah, he is, mate. Yeah. he's really quite happy with the situation with buying oil. You know, he's not too concerned about oil at all. So yeah, looks like we're going to see some upside in oil potentially as well. You know, if oil's unlikely to come below $70 a barrel now because you know there's a big buyer there.
Indeed,
and,
yes.
and that's and I don't know which market he's dealing with. So actually, the market we look at, where is $70 a barrel? You know, in accordance to them, does that actually exist at 80 on the cash? I don't know, but if we look at what that would mean for oil, and already today we're starting to see some upside. Already today we're seeing, you know, I think Lewis's point about the potential pattern here is correct. You know, we've got a potential for an inverted head and shoulders kind of going on there. So if this does also manage to catch a bit of a bid because of what's going on with Joe Biden, there's a really good chance the FTSE goes with it. Now that would suggest that oil comes right the way back to this particular level here, and you know the level might be a little bit higher, but it does suggest that possibly $100 a barrel could be on now for oil. But that looks like a pretty good spot to try and get in to oil. Now on the dailies, looks like a decent bar, doesn't it, from yesterday? We got some levels to clear. You know, if we were to sort of like analyze this chart and where we would get on this is the trend line coming down on the 4-hour. Stuck our head above it. You know, it would suggest that if it comes back in and manages to hold the line, as Johnny Cash would say, then it looks like we could get some decent upside here for oil. So I think that I think there could be some shifting going on here, mate, in a bit of market sentiment. You don't want to get caught on the short side. I don't think at this stage. I don't think we wanted to get caught on the short side for a while, you and I. Have we got enough to suggest that there could be some longs? I think we probably have.
Well, I was short oil on Monday, I think it was, or late last week, can't remember. But yes, got my profit in the bank pretty quickly on a technical level, which was the monthly pivot, if I recall.
Yeah.
So I think that's, if you are short of those things, I think that's very wise at the moment to get some profit in the bank pretty quickly.
Yeah, BP up 1% this morning. Sorry, BP up, yeah, around about 0.75%. Shell's up around about 1%. So that's also been reflected in the producers here. That they like what was said from the United States. I mean, the challenge always is that you know that their job is to spin. You know, their job is to spin things to make them sound and look better than they are. But in saying that, if you're willing to buy at $70 a barrel, then all of a sudden it does give the producers a lot more confidence that they're doing okay. And as long as it doesn't cost you $70 a barrel to bring it out the ground, you know you've got profit. So you know you could then start to sort of like supply the market. And interestingly, eventually that will do oil down, because obviously, you know, if there is enough supply that comes in from the United States, and then all of a sudden there's something that then happens that suggests that we could get further supply, then of course oil will crash from that particular point. But right now it looks to me like the winds have changed for oil. $70 a barrel would be down to not quite those lows there, a little bit beyond these lows here. Around about here. And I suppose we should really touch on gold, because Lewis is in gold. I mean, it's just danger zone, isn't it, for gold? It's just it doesn't even look like the danger zone's even in existence anymore. It looks like it's through. It looks like it's going. And what that means for the price of gold is I suspect that you know, the same as Lewis, it could bring it right the way down. I mean, who knows where.
There was a great entry there on Tuesday, pretty clear.
Yeah,
and
there,
Lewis
there you
picked it
go.
up.
Looks like around here for the next batch. And I have to say, mate, gold, the cost to bring gold out the ground is going to start getting squeezed if we go below 1550, you know, and gold, you know, if you want a decent price on gold, anything along this trend line is going to be really, really attractive. And there's a possibility it does come all the way down to the trend line, but anything along this trend line is going to be hyper attractive, because at that point, the spread between what it costs to get out and to sell it is going to be almost non-existent. I'm pretty sure it's 1250 to get it out the ground. When you take everything into consideration, I think it's about 1250. But I'll look at that when you're doing your analysis and give you a proper number on that.
Yeah,
but
look, I think we can, you know, it's conjecture all the way to the bank with gold. It's, you know, so many reasons to be thinking that gold has to be a buy at some stage. The lower it goes, the better the price is going to be. All those things, the hedge factor has to come into play at some stage. It's the only recognized historically well-known storage of wealth or hedge against inflation, as we know. But then you can argue, as I've said before, and not only I've said before, 100,000 people probably said it before, that if the world goes suddenly digital currency, then gold could very easily be replaced as the go-to hedge against inflation by just overnight, switching it off overnight.
Have I told you about the World Gold Council's plan for that? Did we talk about that?
No, but I'd like to hear it.
Oh, mate, it's absolutely amazing. So digital currencies, the whole thing with digital currency, well, not the whole thing, but there's a few sort of factors with digital currencies. Obviously, the first thing is the decentralized nature of them, which makes them attractive, which is going to get wiped out because the regulators are circling, and there are now further announcements that there's going to be some sort of universal regulation suggested. I doubt they'll be able to get it sorted, but they're suggesting it. So the vultures are circling for Bitcoin, for cryptocurrencies anyway. But the other thing about it is that it is a transaction which is printed onto the blockchain, and it becomes a smart contract, and it's there really in black and white, and it's something that people really like about cryptocurrencies. So if you are considering Bitcoin as the alternative to gold, then as a store of value, which it's been terrible obviously this year, what people like is the lack of supply, and you can still sort of like use it as legal tender. So the World Gold Council are suggesting a digital currency which is backed by gold. Now we've seen it in smaller companies kind of like doing this already, but it's not quite the same because it won't be organized by the council in the same way that OPEC effectively control oil. So they can use this digital currency and back it with gold, and the supply will only increase when gold comes out the ground. So there's not an infinite supply by any stretch, but it does mean that if there's all of a sudden they discover more of the stuff, or they work out how to get it out of the sea, or maybe even somebody comes up with some sort of alchemy to create gold, which they're trying to do with diamonds. So I don't see why gold would be that far away either. But it would effectively become a proper currency, because it's not like paper. It's something substantial, and anything that's in the vault would be backed by this cryptocurrency. And the idea is that cryptocurrency would be a form of payment. So when you went to the supermarket, you would be paying in gold. but you wouldn't be paying in gold that you take your bars along. And it's
Yep.
almost going back to what gold's original use was. Sorry, what the dollar's original use was, which was an IOU for
Yes.
gold. So
Yep.
you would go back to that particular system. Now, if that was to happen, we are talking about a system which has already been tried and tested and worked for many centuries, but moving now into the modern era. So there are really interesting things at play for gold, and the difference with that and Bitcoin is that it's tangible. So it's not like you've got this digital currency which is a number. This thing's a number, but it's actually backed by something tangible. So any point you can actually sort of feel the physical if you want to. You can cash it in and feel the physical. Now, this is a suggestion that was being made by the World Gold Council around about 2-3 weeks ago. So it's quite new.
Okay. Yeah, that's interesting.
And yeah, but what that does mean, because it is so new, it could take quite a long time to get any kind of adoption. But if it were to be adopted, I think it could be a really interesting dynamic for gold, and it could be a really interesting dynamic for money and cash as well, because we could then go back to a reserve currency which is more universal than the dollar, and it would make a lot of sense for a lot of people. You're paying in gold. You're not paying. Everybody would know the value of it. The value can't go up and down in the same way that the dollar goes up and down, because it is. I mean, you see how stable in comparison the price of gold is to anything else. Gold has dropped this year. Well, was it dropped from 2,000 down to 1,600? So, we're looking at around about what, a 4% drop?
20%. That's 20%.
2,000 to 1,600. Yeah, so yeah, about 15%, isn't it?
No, it's 20%.
2,000 to
That's 4,000 drop in a 400 drop in 2000. It's 1/5. Right?
Yes, it is, mate. Sorry, you're absolutely right. Yeah, absolutely right. So 20% drop. Okay, so maybe that's not quite as stable as it looks, but it's more stable than Bitcoin as a kind of as a comparison.
Yeah, look, 100%. And if you were holding Bitcoin and gold for the last 5 years, you're doing okay. Don't worry.
Yeah. Well, absolutely right. But yeah, so that's the situation, mate. So I think there are things sort of at play, and I think that because we've talked about this before with the potential collapse of certain systems, and the dollar being one of them, and what would be the alternative. Bitcoin isn't an alternative because there's not enough adoption, and secondly, the regulation is just too vast right now. The regulatory suggestions are too vast right now. Well, gold's kind of been through that already. What they're trying to do is make gold easier to trade. It's a lot more difficult to kind of get your physical gold going on. But if it's a digital currency, and it sits in a wallet somewhere, then it's an ideal solution really for gold. And as I say,
it sounds it. I'm sure there's a lot of logistics to be had before we even get close to that, but.
Yeah, well, exactly, mate. And I suppose that's the thing. How fast can they move? How motivated are they to kind of make this step into the 21st century? Because if they're motivated and they can get this thing sorted, then I think there could well be a lot of adoption. And I think this is the interesting thing about cryptocurrencies, is that the likes of Bitcoin, Ethereum, Cardano, and XRP. What they may have done is open the door for the bigger players to understand and realize what the possibilities are. They may not
for sure. They've got their attention. There's no doubt about that.
They've got their attention, but the issue for cryptocurrencies is that they may not be the solution that they were designed for. What they might have done is made people go, oh, okay, there's another way. All right, well, we'll just use your idea and use it on our CBDC or on gold or something that
and look, that was always going to be the case, wasn't it? Really, at the end of the day, and we've been talking about this for 2 or 3 years now.
Yeah,
it was always going to be that the technology is sound, or if the technology is sound, which it appears to be. I mean, blockchain technology appears to be pretty cool.
Yeah.
then the central banks of the world are going to pick it up. It's going to become mainstream, and therefore the whole reason to form it in the first place kind of gets cloudy.
Yes.
Because it then becomes the target of, and I think for the second week in a row, we've now had a security breach with major players, right? So, there are bots and God knows what out there trying to break this stuff down all the time. That's all they do, is try and break this stuff down. So is it bulletproof? I don't know. Got no idea. You're asking the wrong bloke if you're talking technology here, but it occurs to me that until it is 100%, and they say blockchain technology is pretty close, but then you hear stories about it being targeted and breached and all the rest of it. I don't know, mate, at the end of the day, but if it is sound, then obviously that's the future. No matter what shape it takes, and no matter what they use as the reserve currency, whether it's Bitcoin, whether it's gold, whether it's poppies, I don't know, got no idea.
Well, I mean, central banks globally have been buying a lot of gold. The United Kingdom is way behind, but central banks across the world have been at it, and as the price of gold dips again, they go and buy some more, and I think that's maybe sort of where the likes of El Salvador are now going to get punished because they were buying Bitcoin. I mean, what happens to a country like that? We were talking about it not that long ago. They were buying Bitcoin, and they were buying Bitcoin way above where we are now.
I mean, it's not a massive amount of money, as I read an article the other day, or was it even yesterday? It's only in the millions of dollars. It's not billions and trillions. Unless the article I read was wrong, and it doesn't sound right if they're using it as a currency, but I don't know. Again, way above my pay grade. Way above.
Well, yeah. I mean, we've got. Now let me just check the supply here. So,
but Lewis, the double top, mate. Yes, she's a beauty, isn't she? Still no lower high though. Still no lower high, which is interesting.
Yeah, well, you're absolutely right. I mean, the fundamentals for gold aren't good. They really aren't good. We had a big sort of move in the ETFs. Gold supply is still pretty good as well, and the demand is just weakened and weakened and weakened. So it doesn't look good for gold. But as I say, there will be a point, and I'll try and find it, mate. When you're sort of like doing some analysis, I'm just trying to find what the cost is for them to get it out of the ground. I saw it the other day, and I'm pretty sure it's around about the 1250 mark. But I'll have a look and see if I can find the actual the absolute number.
Yeah, look, and we do know that's unsustainable, right? To pull gold out of the ground. But we also knew back in, where are we now? 2019, was it? Or 2020? Can't quite remember it. That it costs $40 a barrel to pull oil out of the ground as well.
Yeah.
Yet it went to zero.
Very true. Yeah, very true.
Yeah, we can't really know what the markets are going to do with all that stuff until really it happens. That's why we can only,
that is very true. I
mean, I suppose follow, not lead.
I suppose one thing you can look for, though, with something like gold is that if it costs a certain amount to get out of the ground, and you start to see the ETF the ETF traders come back in, and you start to see, some of the other demand metrics come back into play, then you'd be a little bit more comfortable. Maybe the COT data also suggests it, possibly some seasonality. But if the fundamentals start to kind of like line up with the cost, then that's when you start to take things on board, and that's the same way that I would approach any market. That's the way that I'm approaching the Nasdaq, if you like, and why I think there might be some buying going on here. Is the price right now? Do the fundamentals make the price attractive? And they may. There's always going to be sort of like an argument either way. I don't like the inflation numbers, of course, but it could be that that the dynamics have changed enough to make it attractive at these particular prices. Lewis says he
really, yeah, we spoke about 1200 after we saw the double top. That's true. The really cool part about it is that if they do go below extraction price, guess what happens? They stop mining it.
They stop mining, exactly. Yeah. So the supply comes out.
Absolutely. There's only one thing happens when the supply goes down, right?
Well, as long as the demand is the same, yeah. Yeah.
Nothing changes. This market is always supply and demand. That's
what it is. Yes, it is. Yeah, that is all it's about, is the supply and demand. And I guess that's, sort of like onto something like, just going back to something like the NASDAQ. Are we in a situation now where there is, the people that have got the shares in things like Netflix and Tesla and IBM and possibly Microsoft and Amazon are thinking, actually, we don't want to release these. It's come down all to this point. We are pausing dumping our shares, and actually, we'd like to hold the positions here. And then other players start to come in and go, actually, I've seen some earnings reports. Let's take a punt at this level as a potential bottom. And the demand starts to come back in.
As I said, the bottom feeders are going to be hungry. Absolutely.
Yeah. Well, they're waiting, mate. I mean, you think about how badly this market has been obliterated this year. Pensions are just getting, I'm surprised we haven't heard about more companies going under. But we haven't.
I guess the reverse side of that is, how can they possibly complain, the superannuation funds, because they've had 14 years of upside? If they haven't been able to, create enough to sustain them for a 25% retracement, then I'd be pulling my money out of that.
Well, that is fair. I suppose if you were the person that is taking your pension today, however, you're probably suffering.
Yes, and look, this happens every single time that the stock market corrects, and I get phone calls with people asking me, friends asking me, "Oh my goodness, we're going down. What do we do?" So nothing. Do absolutely nothing, because it will change.
Yeah,
that's all you can do.
Yeah.
Unless you're an active investor or trader. And you've got your money tied up with superannuation funds, you just sit back and stop your Netflix subscription or something.
Yeah, exactly. Yeah, make cuts in other areas. Yeah, there's it's you're not done until it's gone to zero at the end of the day. And
exactly, and it's not going to
maybe some of their holdings will have done that, but yeah, I agree with you, Matt. I still think that there's some there's going to be some interest in stocks, but it's a difficult environment, no question. Difficult environment, really tough. When do they pivot? When do they announce a pivot? JP Morgan have said 75%, 0.75% in November, 50% in December, and 25 in 0.25 in January. So they're looking for that particular trajectory, and that would leave them at 4.5%, which I think people would be uncomfortable with, but they will deal with it, especially if the numbers are as they are now. Maybe another 1.5% hike would be just about livable with. It's going to choke growth, but if it gets inflation under control and it doesn't choke growth substantially, as it looks like it hasn't in certain companies, then they can then sort of like start to ease back, and then things can start to go again. But I think we might be waiting on this for a little while yet.
Yeah, look, really interesting times. There's no question, and if you've been short since phase one of this down or bear market, if you like, I can't see any reason to get out. Really can't.
No, No, I'd agree with you. I'd agree with you. FTSE looking okay though, mate. The price action isn't particularly healthy at this particular stage. It's not really sure what it's trying to do here. This bar's starting to look a little bit more positive. We've got about 5 minutes left before this bar closes, and it's tested the lows and come back up again. Don't love the level, but we've seen some interest at this particular price point here, and let's see what ends up happening on that particular bar, and see if that doesn't look too bad. I don't know how you would analyze that chart, and whether that would be a setup you'd be of any interest in, but it does look like there's a line here just being toyed with.
And you're right, it's being toyed with. I don't see any great clarity there, but I do see the potential for that to be a false break. Can't trade it because you're at the lows. That's the problem.
Yeah, exactly. Yeah, we are at buy zones, which does make things just that little bit more attractive.
You want to see the Tesla chart?
Yeah, let's have a look. And while you're doing that, I'll see if I can find the price that gold costs to get out of the ground.
Okay. And I didn't follow up on that story about 1 million Tesla vehicles being recalled. If anybody can confirm that, that would be interesting to know. Look, I don't know how to use this chart. All these squiggly things down here I don't know too much about, but what I do see here, will this come across? No, it won't. Like I said, I don't know anything about this chart, how to do it. But here's what I see. Can I put a line on here? Yes, I think I can. Trend line. I'm on a weekly chart, right? Oh, stay there. Okay, I've got a big. Can I draw on this?
It's a brutal looking chart pattern there, mate.
Brush, what's that do? That'll do. If that's a head and shoulders, that's the neckline.
Yes.
And
yes.
If that's the neckline, we've broken it and we're currently retesting it. So if this looks like this on Monday morning, I can't see any reason why I wouldn't want to trade underneath that bar there with my stop loss there.
Yeah.
And first take profit probably here somewhere.
Monday morning or Friday?
No, Monday morning is the weekly chart.
Oh, weekly, yeah.
So if I now go to the daily chart, I don't know how I get rid of all these things. What's going to happen if I press remove? Press on that, press on that, press on that. My God, this takes forever. Okay, I'll leave them there. Go to the daily chart. Ooh. Zoom here. Let's just have a look at this area. Lower low, lower high, lower low, lower high, lower low, looking for a lower high here. Got, as I said, a massive reversal bar there yesterday. And I don't know why I haven't put a trade in on this yet, because I'm getting an inside bar here as well. If this bar can't take out the high of yesterday's bar, I reckon this is sell all day. Take your first profit here. This was on the back of good earnings, right? I don't know where it was released. Earnings, actually earnings is here today on Tesla. So it must be overnight. Is Tesla's earnings out already?
Yeah, we did have some earnings yesterday. Yeah.
Earnings and revenue. I don't even know what that means. But anyway, the point is, if the earnings being good, as you said,
They were okay. There was you know, it was a bit of both, to be honest. I'll bring it the story up.
All right. Well, if they aren't able to take out the high of yesterday's bar, which is a classic reversal bar, then I would suggest that an entry underneath there at around about $215.60 with a stop loss at around about 230. Let's go even a little bit safer. 235 with a first take profit around about 203. I reckon you're in for a potential very early entry on a massive move. Because if we go back to that weekly chart and I go here and you get this is your profit area, and you've still got that head and shoulders there. This could go forever.
Yeah, I mean, I like it at 170, I think it is, wherever the share split was. I quite like that
out
price.
there somewhere.
Is at the 170 level? Yeah, yeah, it looks about there. I like it. I like it there. It's a decent zone to me.
Yeah, look, I think you're right in the ball game right now with that weekly break and now retest. But I'll try this early. I'll have a look at this in the morning, and if there is an inside bar on the daily, then I think this is a reasonable position to take.
Let me give you the story, mate, because actually there was some negativity here for Tesla, and let's see if I can find it.
Yeah, look, the flip side of this, of course, is that could easily be a false break of the trade line, in which case it doesn't matter, because this won't be an inside bar, and or even if it is, and it closes on its high, then it'll keep going. So that wouldn't concern me. I'd be okay with that.
Okay.
I think the pound is out. No? Yes. Yes, the pound is out. Man, took us out by the pip. You'll hate that. Gotta hate that. 1.1240. Yeah, the spread's got us. Little dog. So that one didn't work, guys. Pound didn't work. But like I said, you only need 1 in 3 to win to be positive on this particular system. What did you find, mate?
Actually, so much news on Tesla. God, there's a lot more than I thought here. What's this? Tesla was after shares fall. Yeah, so it looks like there is short of expectations. Oh god, it's a bit of a mess of an area to try and find a story. Actually, there's a whole bunch of stories here. I think they missed expectations, but it wasn't negative. It was just that they missed expectations. That's from memory, but I will have to find out what's going on here.
Well, anyway, I think the chart's interesting, no matter what. I think the chart's interesting. And also think this chart's interesting. And as I said, this was my go-to for the week. If it's set up, this is silver. And with silver, we've got what I prefer to see is this in reverse. We've got a false break here, a false break here, and a potential false break here. I'd like to see a false break here, followed by a bigger false break here, followed by a bigger false break here, but it's not what it's giving me. But it is giving me price back into the range. And another bounce off this trade line looks imminent. The problem I have is twofold. One is it's a buying bar, and I don't like green bars long, but what I can see is enough area to take profit before you hit these pivots again. The flip side of that is I've got a classic slingshot scenario here that's telling me short is the way to go for profit. I think I've said this all week. It's a case of not sure, but if it does show me, then I think there's a trade in. And as yet, I'm still not sure. It's going to depend on what this candle looks like tomorrow. But this level here is intriguing. It really is intriguing. And it's similar to what I've just described on Tesla, right? So after a massive breakout of this area here, even horizontal level, if you like, we consolidated, put in a double top, started putting in lower highs, lower lows, lower highs, lower lows. So again, is this a bounce point off that trade line, or is this a break and retest? And I favor the latter, because I think this is going down. This is silver, right, before it goes up. I want to be on the upside of silver, as you know, and I still think physical silver is the way to go. But at the moment, I either place the order on the monthly chart and wait, or I play the range and play it back to the top here and sell it up here. And I think that's my favorite play, because I can get a far better price on it up here than I can down here, of course. So if I get this right, I can make money on the way up to get my price. And that's, of course, what I'm looking for. Yeah, look, it's three little Indians in reverse, Lewis, and that's the problem. You want them to go further higher when they're up here, and you want them to go further lower. You want them to go deeper when they're down here. So it's actually three little Indians in reverse, which doesn't fill me full of confidence, I've got to say. But this is going to be a buying bar tomorrow by the look of it. I just don't like to buy those bars because they're green. That said, there's enough room to take profit before the pivot. So I'll call that in the morning in the Telegram group. We'll see.
I found the Tesla story, mate.
Yep. What you got?
It says revenue for the third quarter was 21.45 billion, which is a record, but short analyst estimated of 21.96 billion. So it was a miss on the estimates. As I say, and they also cited the fact that the higher dollar is problematic because they're importing raw materials. But as I say, it's one of those things that they put in decent numbers, but they missed estimates. Now, what does that tell you about sort of where it is in relation to price? I don't really know, but it is telling you that the company is still doing okay. It's pretty robust and it's growing.
And nothing about the recalls.
Probably. I'm just looking at the numbers, and it's quite a long article, so there probably would be something to do with recalls. Yeah.
Well, I think that's a crucial piece of information. 1 million cars, that's got to go into hundreds of millions of dollars, I would have thought, to fix it.
Yeah.
If not billions. Does billion mean anything to Tesla anymore? I've got no idea.
Well, I mean, they're after. I mean, we're talking about revenue for the third quarter was 21.45 billion. Sorry, I think I might have said million. So it's 21.45 billion. So the odd billion lost here and there probably wasn't affecting
It's
too
not
bad.
a huge issue, right?
Yeah.
Poor bastards. All right. I think, right now, I'm going to leave you with the trade of the day tomorrow. If it sets up, we'll be pound CAD short, and I just need a bull bar today. It'd be really good if price came down and put a low below the weekly pivot, then came back to test the daily in the trade line. That'd be cool. That'll be the trade of the day tomorrow if it sets up. Euro dollar today, because we always look at euro dollar. Actually, we're talking about euro dollar early, weren't we? And Lewis, it's so not within me to go long here because the market structure is telling me to go short, but not yet. It's got to hit the top of this range, right? Or does it? Because it's come off the top, or has it? It's come off the top here. Top, bottom, I'll call that top. It hasn't hit the bottom. So it's either going to reverse or we're going back to the bottom. And I can't answer that question just yet. But the slingshot's telling me it's going to here before it goes here. It's a tough one. But today, if I'm thinking trading on the small time frames, I've lost my edge. Well, no, I haven't really, because the daily pivot's still untested. But price would have to come back down here before I trade it. And the only direction I want to trade it, unless it hits the daily pivot, is long. That's the only way I want to trade it. But it has to come down here first. It probably has to come down to there and put in a false break, get to there, then I can trade it to there. But I won't be wait that long, I don't think. So it's probably a no-go zone for me today, euro dollar. But that's the way I would trade it if it sets up. But yeah, a long way from there. So that's probably me, mate. I'm going to struggle to get even this week, but I'll have to stay in front. Have to stay in front of the charts to do so.
Yeah, fair enough, mate. I mean, it's we did a whole show without talking about Liz Truss and the joke of the political situation here, which is quite amazing. So we won't.
It is amazing, isn't it?
Oh.
I mean, they just cannot get it right. Can they? How long this has been going on for 6-7 years?
Exactly.
It's laughable.
Yeah, exactly. Ever since Cameron left, it's been a mess, isn't it?
Incredible.
Anyway, mate, we won't discuss it now. Maybe Monday we will have a little bit more clarity on whether she's gonna survive another day or not. But she's gone. She's not. There's not a chance she survives.
Not a lot of confidence around there, is there?
No, just it's a matter of time, and I don't know why she's bothering, but it's a matter of time before
Billy
she goes.
Joel.
Yeah, exactly, Billy Joel. I would say that I would say that she probably, what we don't know is what the iteration of her leaving means, whether it's Boris Johnson back in power, which is ridiculously being bandied around, whether it's
Really?
Rishi Sunak, whether it's Rishi Sunak, the guy that came second in the leadership contest, or whether it's a general election. But
bring Prince Harry back, he'll do.
Yeah. All right, mate. Well, thanks as always for being my trading buddy. Boris sounds good to you, Lewis, not to me, I have to say. Thank you for all your interaction as well, Lewis. Really appreciate it, mate. Nice to have somebody in the room chatting. And
Indeed.
to the guys as well that joined us. It's good to have you all with us. And of course to Marlon for looking after us. We will see you guys back on Monday. Sorry, I got confused.
There's no holiday or anything, is there?
There's no holiday. No, well, we've got a half term here, but I will be in.
Yeah, you have a period of mourning there by Monday.
What, because of Liz Truss?
Yeah, because the UK Parliament died. It just ran out of juice.
Well, I think it might happen this weekend, mate. You just don't know. I mean, this market is so. Ever since, do you know what, mate? Ever since Brexit, really, this world has been so difficult to nail down. Because Brexit was before Trump. So we just had a catalogue of things that are just mental. It's just, I wonder whether actually we should go back to papers on print so we couldn't find out stuff so quickly and people couldn't use Twitter. I don't know. It's just
not going to happen.
The world is incredibly inflammatory, but yeah, crazy times, mate. Crazy times. But we'll see.
It is indeed.
Monday. Whether COVID, I forgot about that. Yeah, so we've had Brexit, COVID, Trump.
A lot of people have forgotten about that.
Yeah, we've had interest rate, inflation, crazy inflation, central bank pauses, and now we've got the merry-go-round in the UK of who's in charge.
Keeps us on our toes.
Yeah, keeps us on our toes. Exactly. All right,
David,
guys.
Thank you, mate.
Yeah,
Thank you
you're
for
welcome,
being in
mate.
the room. Lewis, thank you, of course. Gary, thank you. Have a great weekend, mate. And thank you for being our trading buddies. Ash, thank you to you for being the ultimate trading buddy, and have a great weekend. We'll catch up next Monday, as you say. Marlon, thanks, mate. Have a good weekend.